Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be diving deeper into the tech powerhouse that is Alphabet. This stock is the parent company of the well-known Google, and for me, a must-have in your stock portfolio. What is Alphabet? Stock ticker GOOG. It's the parent company of Google and is one of the largest technology firms in the world. It operates in digital advertising, cloud computing, artificial intelligence, consumer electrics, and more. It was created in 2015 as part of a corporate restructuring to allow Google to focus on its core business while other ventures operated independently. Some key stats to do with Google. Their current price is $181.52. They are based in the United States, are part of the technology industry, have a massive market cap of $2.2 trillion. They went public back in 2004, have over 180,000 current employees, have a very small dividend payout ratio, currently only 5%. They don't actually have a 5-year dividend growth rate as their dividend only was introduced last year, so their current dividend yield is very low at only 0.44%. And their 1 month performance chart, we can see that Alphabet is down over 10% in the last month. And in today's video, I'm going to be breaking down the stock further, going into a deep dive and showing you why I think you should have them as part of your portfolio. First up, we're going to look at some of Alphabet's major business segments that are going to impact the stock performance. The first one being their most important one, which is their Google search and ads. This is their largest revenue driver as it generates billions through their dominance in the online advertising market. It actually makes up around 75% of their total revenue. Next up is YouTube, another huge earner for Google, and it is a dominant video platform with growing ad revenue and premium subscriptions. These subscriptions are brilliant for the long term as it generates repeat revenue for the company. Next one is their Google Cloud. Google Cloud is Google's cloud computing platform that provides infrastructure, data storage, AI, and analytics services. It competes with Amazon Web Services, AWS, and Microsoft's Azure. We then have the AI and DeepMind, which is another part of Alphabet's company. DeepMind contributed to Google's latest multi-module AI models, competing with OpenAI's ChatGPT. They also have heavy investment in AI, including models like Gemini and AI-powered search. Google is highly profitable overall, but its long-term success depends on AI advancements and cloud expansion, as advertising growth faces increasing regulation and competition. Next up, we're going to have a look at some investment considerations. The first one being investor scrutiny. In 2024, Alphabet's capital expenditures reached approximately $50 billion, primarily directed towards cloud infrastructure and AI development. Despite this investment, growth in Google Cloud revenue has decelerated, prompting investors to question the return on these substantial expenditures. They also have regulatory challenges. The competitive landscape in cloud services has intensified with rivals' anti-competitive practices, highlighting the contentious environment in the cloud sector. Not only this, but you've got the worldwide pressures as well. Alphabet's advertising business, a substantial revenue generator, faces intense examination from regulators worldwide. Having already faced billions in fines from the European Union, the EU has been investigating Google's advertising technology practices, particularly focusing on potential anti-competitive behavior. In September 2024, Google offered to sell its advertising marketplace, ADX, to address these concerns. However, European publishers deemed this proposal insufficient. The UK's Competition and Market Authority, CMA, has initiated investigations into Google's search and advertising businesses. This probe aims to determine whether Google's practices stifle competition and innovation, potentially leading to enforced behavioral changes. And finally, in the US, the Department of Justice is pursuing actions that could result in the breakup of Google's ad-driven search business, citing anti-competitive practices. So they really do seem to be getting attacked from all angles right now. Some further investment considerations. are the slowing ad revenue growth. Increased competition from Meta, Amazon, and TikTok are taking market share in digital advertising, challenging Google's dominance. They also have macroeconomic sensitivity. This means that advertisers will reduce spending during economic downturns, which can directly impact Google's earnings, so it's important to keep tabs on the bigger picture. And finally, we have got a lack of dividends. Google pays a very small dividend at only 0.44%, and this was only introduced last year. Depending on your investment time horizon and personal needs, this stock might not be suitable for you. Having said this, if you are a long-term investor like myself and want to own quality stocks, then Alphabet may be one you want to add to your portfolio. Let's highlight some of the main reasons why I think you should look to add them to your portfolio. First off, let's have a look at their recent earnings call. The company reported a 12% year-over-year increase in revenue for Q4 2024, totaling over £96 billion. Their EPS rose by 31% to $2.15, reflecting strong profitability. Operating income increased by 31%, with operating margin expanding to 32%. In the recent earnings call, it was announced that revenue grew by 30% to $12 billion, driven by demand for Google Cloud Platform services, AI infrastructure, and generative AI solutions. Meanwhile, in advertising, Google Search and other advertising revenues saw a 12% increase, while YouTube advertising experienced growth, contributing to the overall revenue rise. The company emphasized its leadership in AI, highlighting the launch of Gemini 2.0 and other AI-driven products aimed at enhancing user and development engagement. Moving forward, Alphabet also planned to increase capital expenditure to $75 billion in 2025, focusing on more AI and infrastructure investments. Looking a little bit deeper into some fundamental analysis, they have a positive gross profit currently at $203.7 billion, positive operating income at $113.7 billion, positive net income at $100.1 billion, positive free cash flow currently sitting at $72.8 billion, exceptional ROE at 33%, exceptional ROIC at 31%, solid short and long-term solvency, extremely low debt to equity at only 0.03, a ridiculously high Altman Z-score at 13.4, and phenomenally having negative net debt at minus $84.8 billion. Really highlighting some strong fundamental analysis for Alphabet. Next up, we are going to have a look at Alphabet's free cash flow. Free cash flow is the money a company has left over after paying for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on the direction a company may be heading. And as you can see from the chart, they have very strong free cash flow in recent years, reflecting its robust financial health. In the fiscal year 2024, Alphabet reported an FCF of $72.76 billion, which was a 4.7% increase from the previous year. Their FCF has increased from $16.09 billion in 2015 to $72.76 billion in 2024. Notably, there was a significant surge in 2021, with FCF reaching $67 billion, up from $31 billion in 2020. And while there was a slight decrease in 2022, the upward trend resumed in the subsequent years. Looking ahead, Alphabet plans to increase its capital expenditures to $75 billion in 2025, underscoring its commitment to maintaining competitiveness in AI and cloud services. And while Alphabet's substantial investments aim to drive long-term growth, they may impact short-term free cash flow and profitability. But if you're like myself and are an investor looking for good long-term growth stocks, then this should be of no concern. Finally, we're going to have a look at some more reasons as to why I think you should own Alphabet stock within your portfolio. First one being their PE ratio. In the trailing 12 months, Google has a price-to-earnings ratio of approximately 22.56. This valuation is relatively modest compared to its peers in the technology sector. For instance, Alphabet's P ratio is lower than that of Meta Platform, which stands at 28.58. And historically, Alphabet's PE ratio has been a median of 28.35 over the past decade, so it's currently 22% below that mark. In summary, Alphabet's current PE ratio suggests that its stock is trading at a more attractive valuation relative to some of its industry peers, potentially offering a more appealing entry point right now for investors. Next up, we have share buybacks. As you could see from the last slide, Google has extremely strong free cash flow, which means they are able to put it to good use by buying back shares. Google has been actively repurchasing its shares in recent years, aiming to return value to shareholders and optimize its capital structure. In April 2024, Alphabet's board authorized an additional $70 billion for share repurchases, focusing on Class A and Class C shares. Alphabet's substantial buyback program has positioned it amongst the top companies in the S&P 500 for share repurchases. In the second quarter of 2024, Alphabet was second only to Apple in buyback volume, reflecting its robust financial position and commitment to enhancing shareholder value. And finally, we're going to have a look further into them paying a dividend. I know you're probably thinking I've already mentioned this earlier in the video and how this dividend is very small, but hear me out on this one. First of all, it is going to enhance shareholder value. By introducing a dividend, provides direct financial returns to shareholders, complementing potential stock price appreciation. This move is particularly appealing to income-focused long-term investors seeking regular quarterly payouts. It is also a signal of financial maturity. The decision to pay dividends often reflects a company's confidence in its ongoing cash flow and financial stability. For Alphabet, this indicates a transition from a high growth phase to a more mature stage capable of generating consistent profits and attracting a broader investor base. Dividend payments can make a company's stock more attractive to a wider range of investors, including those who prioritize income generation. I'm living proof of that. I am a dividend-focused investor, but still want high-quality growth stocks, and Google now ticks all the boxes for me. This can lead to increased stock demand and potentially higher valuations, as shown when it was announced. The stock rose 16% in after-hour trading, and this reaction underscores investor approval of the company's commitment to returning capital to shareholders. So what does this mean for Alphabet? Well, despite the strong recent earnings that I highlighted today, Alphabet's experienced a decline in stock price due to concerns over increased capital spending and a slowdown in cloud revenue growth. However, for me, if you are a long-term investor, then this is a must-have in your portfolio. Alphabet is shown to be an extremely dominant tech powerhouse with strong fundamentals, high profitability, and continuous innovation in AI, cloud computing, and advertising. With markets being near all-time highs and a lot of stocks trading at an overvaluation, I can't believe that such a strong company is trading at these great prices. With consistent revenue growth, strong free cash flow, regular share buybacks, and attractive valuation right now sitting at under $200, it remains a must-buy stock for long-term investors. I'd love to know your thoughts on Alphabet in the comment section down below, and if you have any suggestions for any other stocks trading at a great price right now, then please let me know. Thanks for watching. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Until next time, keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.